Have you ever felt like the stock market seems a little crazier during some months of the year than others? Today, the RLS boys look at the actual data over the last 94 years for the S&P Composite and find which months historically are the most and least volatile. Armed with this insight, next time higher volatility hits, you'll find it easier to be calm, cool, and collected. Stay tuned as we discuss all that and more right now on the Retirement Lifestyle Show.
Welcome to the Retirement Lifestyle Show. I'm your co-host, Roshan Loungani, here as always with Adrian Nicholson and Erik Olson. Gentlemen, we have an interesting topic. I'm looking forward to discussing this today. First, how are you doing, Erik? You were traveling a lot last week. Adrian, you were in Chicago. So guys, tell me about what's been going on.
Adrian, let's start with you.
Yeah, I was in Chicago and it was a really great time. The first time I've been back in a big city for a while. I did a little bit of exploring, tried some of their local food. I thought it was good. Went near like the water. That was awesome. The Silver Bean, I forgot what's its name, but it's like a really popular like Instagram attraction that people go to. I checked that out. So overall, it was a really fun time. It was also great finally seeing Erik in person for the first time. So that was awesome.
That was.
Yeah, and Adrian, I'm pretty sure that's still just called.
I just called it the Silver Bean because you can see your reflection in it, honestly, and it's pretty bright if the sun hits it. Yeah. So I had a really great time, but I just sound like a big tourist by calling it that. But overall, 2 thumbs up for my trip to Chicago.
Yeah, you were a tourist. Enjoy it.
That's right.
That's great. And Erik, how about you? You're from Chicago, so our company, Arte, our firm, had our annual conference, which is why Erik and Adrian were there. Unfortunately, I missed this one. But so, Erik, you've seen the Bean before. You then went to Tennessee. Is that correct?
Went to outside of Austin, Texas, a ways.
Austin.
Hung out with my brother and my sister. So my dad had passed away almost 10 years ago, my mom 4 years ago, and we finally went through about 6 boxes of pictures that my parents had collected in we're just sitting in my sister's closet and went through and but I couldn't believe it. We had 8 generations of photos captured there. And I had no idea. I was really thinking I'd leave with maybe 4 or 5 photos, and I left with 65 pounds of photos. Although I was deemed to be the historian, or my line would be the historians in the family. So we'll go ahead and take that role on. But yeah, it was a great time to hang out with them.
That's nice. When you said 65, I thought you were going to say 65
No,
pictures,
65 pounds.
Not 65 pounds.
That's impressive.
Wow. Did you get like surcharges by the airline to fly all that
as
back?
it just happened, I had just randomly landed on Southwest this trip, and I was so glad because a couple nights ago then I was over at the Goodwill buying some spare suitcases to accommodate all of these photos. So it was fantastic.
All these... that's great. That's great. Gentlemen, let's start. I'm going to bring us into our topic today. It's very timely and interesting. We are recording this at the end of September, and a lot of people think of September and October in the markets. People get scared. They tend to be the months with the with higher volatility, and we wanted to look at it from a historical perspective, look at what's going on today, and then also as an investor, are there any action steps you need to take with that? So I'm just going to start us off with if you look this up, there's a term, gentlemen, you probably heard it, you may or may not have come across it, called the September effect, and they have a variety of reasons why they think the market could have greater volatility or could be down. Everything from people taking profits to people selling their stock to pay for children going to school, to end of summer vacations, it was a little more expensive, got a higher credit card bill, let's sell this. I don't necessarily believe any of these. I find them as interesting things to look at after the fact, but there is definitely data about September being more volatile. Here, as we record this on the 29th, the Dow and the S&P and the NASDAQ are both down over 3% this month. So we are seeing a decline. Gentlemen, what are initial thoughts and initial reactions to the higher? And I started talking about September, but we have higher volatility in both September and October. So initial thoughts or reactions on the volatility in the fall months.
Adrian, you want to chime in first?
I guess like the first thing, I guess like we could both agree on or think about, where you see volatility, you don't want to really react too much or be emotional too much, because like we said, we're planners and we have certain principles or tactics or strategies to kind of help us out when volatility comes. So if let's just say you're an investor and there is a lot of volatility and it's kind of like affecting you, or you're viewing your portfolio in a different way, I think that's important when it's time to like have a conversation or kind of really, peel back the layers to kind of see what's kind of causing that. And again, what better time than like you mentioned, Roshan, September, October tend to be very volatile month. So I think that's just like a really good starting place to just kind of be aware and kind of see what might you need to change going forward. What are some conversations you should have, or what you should look into to kind of, improve this going forward? Because if it's every year the same, where you're kind of just, let's just say you're chilling, everything's good, and then September, October come around, there's a lot of volatility, and you start, your stress levels get a little bit higher. It's good that you start today, or like we say, start yesterday, where you can kind of put up some strategies and tactics so you can always be improved going forward.
Yes, I definitely agree with that. You've got to look at your plan, and in the long run, this higher volatility or these higher volatility months really shouldn't have an impact on you if you're thinking long term. However, it for those of us that are watching the markets daily, it's not fun to see those big down days. And I think a lot of what we're going to talk about today is staying calm and staying the course. But Erik, you've got some great data. So I think that'd be a good place to start. If there are people listening that don't know about the higher volatility in September and October, let's start there. Do you mind sharing some of the information you have?
Yeah, I don't mind at all. So for our YouTube viewers and those of you who are looking at our podcast, literally looking at our podcast by going to our website, retirementlifestyleshow.com, you'll be able to see the charts that I'm about to show. For those of you who are our podcast audience, then I'll just try my best to describe it. But let me just start with this initial statement. I actually would contend that the conventional representation of September and October as being the most volatile months is actually a little bit off. I really think that October stands out as the single most volatile month. And then right behind that is November. So since we're recording this on the last couple of days of September, and it'll be released into the potosphere, if you will, in early October, those of our listeners who are catching this at the right time have 2 months of volatility to look forward to. And really, I think the point that you've made, just buckle up and don't allow yourself to be derailed by it, either emotionally or behaviorally, and wait for the super chill December to arrive. I think that will work well for you. So let me go ahead and share my screen, and I'll bring up this set of charts that I think will be helpful.
Yeah, and Erik, as you bring this up, I think it's very important to note, when we're talking about volatility, that's discussing both ups and downs. So we're not saying that too big of a range in the data you're about to show just shows that the market's moved around a lot, and that's what we're referring to. Interestingly enough, when September is actually the month that is up the least often in the stock market. While you're, as a sort of an intro to what you're sharing, Adrian and Erik, can you guess what % of time September shows a positive result? I mentioned it's the lowest percentage. What would you guess that is?
On that basis, I'll guess half.
Adrian?
I'd go like 25%.
25%. Erik, you were closer on this one. It's actually 45%.
Okay.
So I found that stat really interesting, because people talk about being concerned about the month or about volatility, and we're going to talk about volatility, but even in the month that's up the least often, you're still up almost half the time. It's less than half, 45%, but you're still up almost half the time.
Mm-hmm. Yeah, good. Well, so again, here looking at some charts here. What this first chart is taking it's a measure of the range, meaning take the highest high within a month, compare that to the lowest low within a month. And by the way, this is all using the S&P composite. So for those of you who are inveterate data hounds, you can get on to Yahoo Finance, and you can pull down some of this information yourself if you want to run your own analyses. But the ticker symbol for this is the caret, above the 6 on your keyboard, and then GSPC. So caret GSPC, and you can use that to get the index data. So as you look at this, gentlemen, you're looking at the same image that I'm looking at right now. Which of these months is the least has the least drama from this standpoint?
Looks like
the
it's
least distance. December. Yeah, kind of interesting, isn't it? It's still got 31 days, but it's after apparently after the high volatility in these terms, at least using this measurement, of October and then November. I guess people are just sick of volatility, or they're going to Christmas shopping or something. I don't know exactly what the phenomenon is, but
last month of the year too. So if I had to guess, I would probably guess December, the last month in the year. And you make a great point. Yeah, like the biggest month it looks like on your chart right now is October at 8.72%. And then it looks like the second biggest one is November as well. So that would make sense. After two big months of volatility, you have the lowest one.
So we just came off the third biggest month, which is September. 7.27% is the average range. Now we're coming into October, which is 8.72. Then November, 7.38, and then we get way chill under 6 in December. Comments,
and Erik,
Roshan?
I apologize if I missed this, but just to explain to everyone listening, what this is what is the highest price at any point during the month, and what is the lowest number at any point during the month for the S&P 500.
Correct. Yes.
So what's interesting is when you talk about December and it being the lowest range, my initial thought was, well, I wonder if it's traveling, vacations, sort of that kind of thing. So then I jumped to August because I thought, well, then we should see something similar in August, but we actually don't, right? The next lowest is February. It's got less days, which could be part of it, but I don't have an explanation for the calm in those 2 months. I just find it interesting because it doesn't really line up with what I would have expected.
Right. So, well, anyway, there's one measure, and then I'm going to just flash through here to show how those ranges on average worked over the years from 1928 to 2020. So we're talking about a 94-year history, and you can see, of course, back in the Great Depression, there was a lot of volatility back there, and it's been true along the way at various points. But after 2008, then things calmed down for a while until 2020 when they got really uncomfortable again. Now we're looking at them in a slightly different way. So in this way, this chart is saying, okay, we get conditioned to, I think, over recent volatility. And as if we're lulled into this sense of, hey, things are pretty fine, and things have gotten quiet, and then suddenly we have some downside volatility. What this is measuring is, in which month do we find that the lowest low, or the low of any day, looking back over the prior 3 months of trading. So said differently, on October 1st, for example, we would be looking back at all of the days in July, August, and September. By October 15th, we're looking at all the days from July 15th. And by October 31st, we're looking at all the days from July 31st. So it's every single day is a rolling average. And let's say you've gotten conditioned to be kind of comfortable with how things were. Look at let's take, for example, July. July is one of these where it's not, or maybe December. Let's look at December again. So after all the volatility of those last few months, the lowest low in December is really relatively gentle at 2.3% below the average of all the other days. but October is 5.11% on average, the lows of the days looking back against the prior trailing 3 months of trading. That's that's kind of uncomfortable, and November and September are right behind it. So I think it's that sort of abrupt shift in volatility, and suddenly we were cruising along in July and August feeling kind of at ease about everything, and then suddenly it gets really crazy. That's no fun. Fortunately, December, January, and February are just around the corner, and they're a lot less disruptive emotionally.
Yeah, that is interesting. So that's basically saying in October, the low in October is significantly lower than the July price. So that is definitely showing that you've got at least 3 months of volatility in there, which would kind of make sense that October would be the worst if we just talked about September having the lowest likelihood of being an up month versus October, November, every other month, right? We said half the time.
Yeah, and it's interesting too. Going back to Erik's original chart showing that there's a lot of volatility in the October, and I'm sure our listeners, when they see that, they're like, okay, so what? What do I do with this information? And just one thing that comes on the top of my mind is, let's just say, for example, you do a lot of options. October is a month where there's a lot of volatility, so that you can collect a lot more premium and income. So that's just one area or maybe one opportunity, even though options are very advanced. But that's something to consider, if you're very big into options, right, Roshan? October has got to be a very, let's just say, different month compared to all the other ones.
Yeah, I mean, it definitely gives you the opportunity to collect higher premiums, as you said, because if you're doing things like covered calls and generating income from there, that volatility can be more profitable for you for those months. Although the premium you're collecting is theoretically less than you could be losing in those stocks if they went down. But as a long-term investor, if you're accepting that volatility, you're not going to jump out of the market and start selling just because of it. You're then collecting more premium, which will then be helpful to you.
Yeah, that's really interesting. And then it's sort of kind of the opposite, where December, as you saw at Erik's previous chart, was a lot lower because the previous 2 months were one of the highest when it came to volatility. So it's really interesting. But again, it's kind of the thing, what's going to happen, or what do you do, or how do you kind of respond when you have these months of increased price movements, I think is really interesting.
Yeah, it definitely is. And it's also an interesting time. You had mentioned some of your thoughts earlier about what's going on currently in the world that could lead to the volatility. Adrian, can you share some of that with us?
Yeah, the biggest stuff that's going on right now, we'll just say in Capitol Hill, some of the biggest topics and concerns people have is the government shutdown, the debt default, and then the $1 trillion of infrastructure spending that is kind of going back and forth. And that does create a lot of uncertainty. It does create a lot of debates. And that's one thing that we know markets don't like. And that's also something that could lead to greater volatility. And those are going to be, that's just going to be a really big conversation and things that are going to be brought up this coming week and this month that could really cause some ups and downs in the market.
I mean, we've definitely seen it, and we've seen the volatility that's been in there. I found some interesting stats actually that I shared with you, how often September is down. Do you know that there are 2 months that have a tie that are up the most often? Erik, with the data you shared with us, you may know the answer to this or have it or be able to make a good guess, but what months are up the most often if you had to guess? There are two of them. It's a tie. You get one guess each. Let's see if you can get them right.
I'll say November and January.
All right. Adrian?
I would have, my first guess would be January. I think January is the right one. And then my other one, I'll just say October.
October. Okay. I thought you'd guess it right. Unfortunately, you're both wrong. April and December are up 73% of the time.
Oh, I see.
Yeah, and the next question that I have on here, just sharing some of the data, is what month is most often, not typically, what month is most often the worst month of the year?
Well, how are we defining worst in terms of
Performance.
Performance down?
Loss, yeah,
By the
yeah.
end of the.
Or if you look at what every month did that year, that month would have had the lowest performance.
Well, I'll go back to
percentage.
September since you had said it was up the least often.
Adrian?
I'm just gonna guess February.
Unfortunately, you're both wrong on that one. It's actually August, but it's 16% of the time, right? And if you think about that for a second, that's they're 12 months a year. 1 divided by 12 is 8%. So I guess it's twice as often, but it's still not really a very useful data point. April is the best month of the year, and that's 19% of the time. Also, I don't think very useful. But can you guess the best month ever? What month was the best ever in terms of the best performance in a single month in history of the stock market? This is based on the S&P, by the way.
April 2020.
April 2020, good guess. And I was just saying guess the month, not necessarily the year. But Adrian, how about you?
Go with Eric's guess. That's what I was thinking.
Eric's guess. Okay. So October 1974, and the worst month ever was October 87. So I think I find that lines up, Eric, almost directly with what you showed about the highest highs and lowest lows. Mm-hmm. It kind of makes sense when you talk about just overall volatility, not necessarily up and down, that both of those months were October.
Interesting.
Yeah, gentlemen. So continuing on with this, if you look at some of the data and some of the things that you should be doing, if you're an investor right now, you're seeing volatility in your portfolio, is there anything you should be doing about it?
Yeah, I think that's a great point to start. And if you think about it too, you can just use the individual snowflake argument where the volatility impacts a lot of people differently. If you're somebody that's heavily weighted in equities, you're going to have a bigger response than someone, let's just say, that's just on the opposite end, that's all in cash, where volatility is not really impacting them as much. So the conversation comes down to what's like your overall breakdown and what's your overall asset allocation of your portfolio, because that's going to be a big impact when it comes to increased times in volatility.
Yeah, but that is definitely for sure, right? People will and do react very differently to the volatility in the market. I know I typically, when things go down, I don't get very many calls, I would say, just because it goes down. I feel like I have the conversation about volatility with clients, but I do get some calls from people saying they're concerned and they sort of just need to review everything. I don't really get people who are saying let's just sell everything and go to cash, that kind of thing. It's important to know the type of person you are and manage your behavior. So are you seeing anything else out there that is of concern, or that would have you had any clients, Eric or Adrian, call you worried about the markets or thinking they need to do anything? Or has it been, even though we've got a 3% month down, sort of nothing out of the ordinary and everyone still staying the course?
In my case, I have not had calls about the decline. I don't think people are particularly rattled by it, and particularly, I think it is part of the reason for that is that they have in recent memory this experience of a really abrupt downturn in the early part of 2020, and then a lot of healing after that. So with a lot of rise in the market. So I think that's not, at least the sense that I have in the conversations with the clients is that's not been the clear concern for them. I will say though, I have a number of clients that are concerned about some of the upcoming policy changes and what the ramifications of all of that may be. But that's not so much about volatility, it's about policy.
Yeah, I haven't really gotten many calls either, as far as people worried about the markets or this decline. But I think you make a very good point that since in recent history people have seen such a major decline, this is not at all anything out of the ordinary. So, gentlemen, as we discussed, for our long-term investors, long-term planners thinking about their retirement 20 and 30 years down the road, just ride through these months of volatility, because you've got the calm month of December right around the corner. And in the long run, this shouldn't make much of a difference to your financial plan. This has been another episode of the Retirement Lifestyle Show. Thank you for listening. Please like, subscribe, tell your friends, tell your family, share the links. Also, if you want to look at some of our past episodes or show notes, please check our website, retirementlifestyleshow.com. We'll be back to you next week for another episode, and thanks for listening.